We're staring at a chart that honestly looks like a crime scene. But here's the problem that is keeping me awake at night. On one hand, we have the graph integrating with the hottest chains like Worldcoin, sharing stages with the DTCC, the entity that settles quadrillions of dollars, and finalizing a massive economic overhaul with Horizon. The fundamentals are stacking up for a breakout. But on the other hand, the price is sitting at 3 cents. 3 cents. We are back to the exact price where this token launched 5 years ago. This is the ultimate contrarian test. Is this a dead project walking, or is this one of the most asymmetric setup in crypto right now? Today, I'm going to show you a technical setup that has been building for over a year. I'll show you exactly where I'm placing my line in the sand, my specific buy zone, and more importantly, the exact price level where I admit I was wrong and walk away. Let's get the ugly stuff out of the way first. If you have been holding the graph since 2022 and didn't take any profits along the way, this has been painful. We watched GRT hit 49 cents in March of 2024, delivering a 780% rally from the lows. We felt like geniuses, and since then, it has been a slow, brutal bleed back to reality. The sentiment right now is worse than a ghost town. It is a graveyard. Bitcoin dominance has been the king of this cycle, sucking the liquidity out of everything. Even altcoins with good tokenomics are bleeding out. It feels like nobody cares about infrastructure anymore. But here's why this video matters today. We are not just catching a falling knife blindly. We are sitting on historical support. This 3 to 4 cent region is not just a random number, it is the floor. However, a floor is only good if it holds. And while the price action looks terrible, there is data hidden in the fundamentals that suggests the market might be pricing this completely wrong. While the price dumps, the developers are shipping. The graph's substreams now support the Worldcoin chain. This is massive because Worldcoin is one of the few projects actually onboarding millions of real humans. By integrating here, the graph ensures it remains the data layer for the most active networks. They are not building for yesterday, they are building for the high-throughput chains of tomorrow. And it's not just retail chains. Look at this panel from SmartCon. You have the Graph Foundation sharing the stage with the DTCC. For those who do not know, the DTCC clears the vast majority of stock trades in the US. The fact that they are even sitting at the table exploring blockchain data with the graph is remarkable. As the tweet says, if DTCC is at the table exploring, it means the door is wide open. Then you have the collaboration with Chainlink. Nick Hansen put it perfectly. Chainlink gets the data on-chain, and the graph reads it and makes it usable. These are two essential layers of the stack working together. Now, I have to be objective. I see the comments, but the revenue is low. And you are right. Looking at Token Terminal, the annualized revenue is around $454,000. It is ranked 17th in infrastructure. For a project valued at hundreds of millions, that revenue number is low. That's the bearish argument. But that's backward looking. The Horizon update is the solution they are rolling out right now. It's changing the game. Fee burns to strengthen scarcity, issuance directed across services, and removing that 0.5% tax for delegators. They are fixing the tokenomics to align with the value they provide. Plus, look at DeFi Llama. We are over 91% unlocked. The massive inflation fear that plagued GRT in 2021 is mostly behind us. The supply shock is gone. Now, it's just about demand.
All right, let's let the chart do the talking. This is where the opportunity lies. We have been trapped inside this massive falling wedge since early 2024. This is a classic bullish reversal pattern, but it tests your patience before it pays you. We are currently on our way to potentially touch the support of this wedge for the 6th major retest. The trend is undeniably down. We are trading below the 10 and 21 weekly EMAs. Those are the blue lines. We are below the 55 EMA in purple, the 100 EMA in yellow, and the 200 simple moving average in green. There is a lot of overhead traffic. Resistance is stacked against us. However, look at the Heiken Ashi RSI at the bottom of the chart. It's in extreme oversold territory. In the entire history of this token, it has never been this beaten down. It's flatlining at the bottom. This usually precedes a snapback. Also, look at the volume profile on the left. The point of control, that red line where the most volume has been traded, is up at 9 cents. That level acts like a magnet. Price tends to want to revisit the area of highest volume. We are far below that now. If we anchor our Fibonacci from the cycle high of 49 cents down to the recent liquidation wick, we can see our recovery roadmap. The 236 level is at 14 cents. The 382 is at 20 cents. These are not even moon targets. These are just mean reversion levels. So what am I doing? I'm not here to tell you what to do, but here is my exact game plan. I'm treating this 3 to 4 cent region as a load zone. I'm adding to my position here for a swing trade, separate from my long-term cold storage bags. But, and this is critical, I have a hard invalidation. My stop loss is at 2.7 cents. If we get a weekly candle close below it, this setup is dead to me. That would mean we have lost the launch price support from 2020, and we are entering price discovery to the downside. I will not hold a swing trade into the abyss. I'll take the small loss and wait. But if this wedge holds, my targets are specific. First target, 5 cents. This is just for a small profit if you are entering today. Second target, 10 cents. Third target, 18 cents. Then 30 cents. And finally a retest of the highs at 49 cents. My rule is simple. If we hit 5 cents, I move my stop loss to my entry price. I eliminate the risk immediately. If we hit 10 cents, I move my stop to 5 cents. I trail the profit. I'm not trying to catch the absolute top. I'm trying to capture the meat of the move while protecting my capital. Here is the strategic outlook. The risk-reward ratio here is what interests me. We are risking a drop from 3 cents to 2.7 cents. That is about a 10 to 15% risk. The upside potential to just the first major resistance at 10 cents is over 200%. To the previous high, it is over a 10x. The bear case is that the team is dumping, the market ignores the tech, and we break support. If that happens, we get stopped out. Fine. That is trading. The bull case is that this is maximum capitulation. The sellers are exhausted, and the fundamental upgrades with Horizon and Worldcoin finally catch a bid. I do not understand logically how a token with this much usage is valued this low. But the market can remain irrational longer than we can remain solvent, which is why that stop loss is non-negotiable. I'm frustrated with the price action, just like you, but I have learned that the best trades often feel the most uncomfortable to take. I'm betting on the tech stack and the historical support, but I'm keeping my parachute ready with a stop loss. If you want to track this trade with me in real time, or if you want to see my daily chart updates before they hit YouTube, join my free Telegram community. The link is in the pinned comment below. And if you want to see how this setup looked a few weeks ago, check out my GRT breakdown from December 11th right here on the screen. Much love for watching till the end. My videos are never financial advice, and I will see you in the next one.